Hey everyone, my name is Sean Garrett with Garrett PLLC. I am a business attorney. Pretty straightforward. My practice is primarily transactional law, but we also do a bit of litigation. I like helping my clients with the early stages of their business and helping them grow and scale, as we're going to be discussing today. Are we just going to introduce as we go along, or do we want to do all introductions now? Okay, I'll keep going, and then we'll just introduce as we go. All right, so I put together a few bullet points with a lot of words up there, but I like giving examples. I like making this engaging, real-world experiences. So, of course, we've got formalizing business structures. As we just heard, when it comes to Delaware is an amazing state to get licensed in as an attorney. Very difficult to get licensed there. A lot of businesses do business in Delaware. So having if you're dealing with private equity I would even say some international type of law, having a Delaware licensed attorney is tremendous. So appreciate you being here today. For North and South Carolina, where I'm licensed, we are dealing with a little bit more focused businesses that are, I call them mom and pop shops, kind of homegrown. People who don't have a ton of money to spend on legal, and so they're asking, where do I put my time and effort initially? Traditionally, for me, that's coming on board as a client. We've got a flat rate when it comes to LLCs formations and discussing what their intent is down the road. So I've got a few different examples up here, an LLC, a C corporation. Those are the two main types of entities that we're going to advise our clients on. When it comes to these structures, 98% of my clients are going to be formed in an LLC. A little bit more straightforward, less pomp and circumstance. You don't necessarily have to have meetings of the minutes, and if you're adding other owners, it's not as difficult as it is with the C corporation. However, C corporations are very powerful. John's probably going to ask me to stop moving around. Sorry, I'm Southern. I talk with my hands and move. But when it comes to C corporations, they're very important because it allows you to scale more effectively, and the tax code and laws are written in such a way that you can issue shares. So when you're talking to someone and they say, "Oh, I've got shares in an LLC," you can kind of cut them short and say, there are not shares in an LLC. It's not traditional. However, I have seen some operating agreements, as I'm sure you may have, that have forced shares in an LLC, and I'm like, I don't know who wrote this, but that's just wonky. So there's just kind of some things to think through there. When it comes to C Corps, I'm not a tax professional, so get with your accountant, but they're just taxed more aggressively than an LLC is. I think I mentioned this last time, but if you see this term S Corp and someone tells you, I am an S Corp, you can tell them that your friendly attorneys that you know told you that you are not an S Corp, you are taxed as an S Corp. So just kind of a little designation there. Someone asked me the other day, or even a few minutes ago, how I use ChatGPT. One of the ways I use ChatGPT is just typing out that paragraph response of how is an LLC different than an S Corp, because I get that question, as I'm sure you may do as well, 8 times a week. And so just explaining to clients, you are an LLC taxed as an S Corp, or you're a C Corp taxed as an S Corp, just those designations. I'm probably going to spend a bit more time talking through intellectual property because I see this come up a ton, at least in the last year and a half. Intellectual property is extremely important when it comes to scaling your business because you want to protect your business and your brand. I'm kind of building out a niche for myself in 2 different spaces. The first one you may guess, medical professionals. The second one you probably wouldn't guess. I have a lot of clients in the wedding planning space, a ton. And they're very big on their brand. They pay a lot of money for designs and websites. Their entire brand is their online presence. That's how they get clients. And so intellectual property for them is extremely important. And it's one of those things that if it's infringed upon, they take it very personally. And I agree entirely. You've worked hard to build something. You want to ensure that you protect that. There's different levels of intellectual property protection. You've got patents, you have copyrights, and you have trademarks. Trademarks I focus on pretty exclusively. Trademarks, that's the protection of the logo or the simple word mark of your company. Patents, that's going to be protecting the invention or the way that it's made. And then copyrights, traditionally we think about music and works of art. Very oversimplification there. However, when it comes to these trademarks, we're filing an application with the trademark office, and that's the middle step of the process. The Majority of the process takes place early on, where we're searching the USPTO website, that's the U.S. Patent and Trademark Office website, to see if my client's trademark infringes on anyone else's trademark. Now, you may think it's as simple as, my logo is a Garrett, the Garrett PLC logo is just a G, but if you were to just type in a G and then you search the first page and say, wow, there's nothing else, you're not doing enough. You got to keep going deeper. And so I work with my clients and their logo providers, whoever's generating their logo, to ensure that if they put all the money and time into generating a logo, that logo is not infringing on another brand. So extremely important there. However, once that trademark is issued, it's about a 9 to 12 month long process, I think, at this point. Once the application has been reviewed and approved, it's not over. I have a client that recently, back in November, December, was sued by a company over in Germany for their trademark that was filed. And you would think, why does a company in Germany care? Well, there are companies out there that their entire business is ensuring that there are no infringements of their trademarks and trying to get money out of the people that they think are. It's very unfortunate. I did a bit of research. I saw the thousands of other lawsuits they filed against other people. And my client, I talked to her and I said, listen, they're represented by a very large law firm. It's going to be expensive to defend, but this is something that you need to consider, because of course costs are a big consideration when it comes to defending these matters. And she said, Sean, my brand is that important. I want to defend it. 6 months later, we're now settling, but it was a situation where the big guy just kind of won out. Now, I won't go into the specifics of her mark, but when it comes to trademark infringement, they just start, and I say these large companies, but even on a level where you feel that you've been infringed upon, it could be something as simple as solutions versus solution. And that's kind of an oversimplification, but that's similar to what her word was. They took a duplicative and made it singular, and that was the infringement that they were claiming. And we had all sorts of strong arguments, but again, we didn't win out in the end, but we got her some funds for her brand in the long run. Had she not had an attorney involved, she likely wouldn't have been paid for her brand, not knowing that was even an option. So, yes, Michelle.
Would she get to continue to use her brand, or she has to rebrand?
She has to rebrand, but that would have likely happened had she ignored it, because these are actual lawsuits that get filed. They're federal lawsuits with the USPTO office, and what ends up happening is she gets notice. It's a pretty intimidating document, and then she needs to respond to it. The majority of these, from what I've seen, don't get responded to because most people don't have either counsel that can respond, or they don't really know the process. And then once they don't respond, there's default judgment entered, then they lose their brand. We ended up negotiating funds for her to rebrand, though, which was important to her. So,
Sean, do you defend domain names too?
Do we defend domain names? I haven't had one outside of a trademark that we needed to defend. So not in and of themselves, I would say. All right.
John, respond to the idea. He who has the most money wins.
It happens. But when you've got good counsel, we could be the squeaky wheels and at least, defend you.
There's a price to pay. Sean needs to get paid for the respect of the counsel that you're giving. And that costs money.
That's true.
Big riches, 12 attorneys in every worldwide law firm, no matter how small, he who has the most money seems to win.
Generally speaking, yeah. I don't disagree. I don't disagree. But there's always a caveat. Tighten up your contracts and agreements. So I have clients that will come to me sometimes on time, sometimes a little too late, with their agreements that have not been revisited in a while. This typically takes place in the construction space where company, they open up their doors, they start engaging in business, and then all of a sudden, 10 years down the road, they look and see, we've been engaging these subcontractors with an agreement that we had day one, and we haven't accounted for all of the other changes in my specific clients coming to mind. I'm trying to keep it general, but asphalt paving, and we haven't accounted for changes in codes and laws and zoning and things of that nature. So as you're scaling, just revisit your contracts. Just put eyes on it, read through it. If you see something in your contract where you say, that doesn't make sense, or I don't know why I put that in there, ask someone, get some feedback on that, get some counsel. Staying compliant with employment laws, this is huge. Again, this is going to overlap into Elizabeth's world, it's going to overlap into my world, Nikki's world, accounting. When it comes to employment laws, the number of employees you have are key. Whether you're taking out 401k for yourself and not offering that to your employees is key. There's all sorts of laws that are very important there. If you have questions, get with Elizabeth. Her and I did a podcast on some HR laws back in November. That was a great podcast. Thanks for having you on. And then preparing for investment or exit. So very similar to business structure here. What I run into the most with my mom and pop shops when it comes to exiting is, let's say they come to me with a letter of intent for someone to purchase their business. And I ask them, I have an hour to 2 hour long fact-finding session where I ask them all the questions. And then they answer everything properly. But then at the end of the call, they say, oh, and by the way, some of my employees have equity. And I say, well, when I said who owns the business and you told me just you, that should have been the conversation we have then. So then we have another 2 hour long call where we discuss revising their operating agreements and properly structuring their business, because if someone believes that they have ownership in a business, that's value. That is true ownership. And if you close a business or exit and that equity is still outstanding, the verbal equity is still outstanding, there are going to be big issues there. I may have mentioned this last time, but North Carolina recognizes verbal amendments to operating agreements. So if you tell someone on December 25th, 2025, I will give you 10% of the company, and then that day comes and goes, theoretically, they may have equity in the company. So something to keep a pulse on. Write down everything, send it to your attorney. If you've got something in the back of your head where you want to do something, check with them and just say, hey, let's make sure that this is all compliant. So there's normally a lot of questions when it comes to this type of matter.
I was just going to speak to the employment law piece.
Yeah.
I've had situations come up over the years where somebody was looking to acquire a business, and before they acquired the business, they would bring in an HR professional to, kind of dig through the closet and see where the skeletons are, and where are your I-9s, or how are your employees classified? Oh, we don't have any employees. Everybody's at 1099. And people have walked away from deals based on the liability of a person not structuring, at least from the employment law perspective. I've definitely seen that happen, where people walked away from deals because there were too many skeletons in the closet, or too much, risk associated with that piece of it.
Yeah, no, risk is a big concern. When it comes to exiting a transaction or exiting a business, what's interesting is you're going to have people on both sides. You're going to have a deal team on the buy side that is analyzing all the documents or lack thereof, which will throw a lot of red flags. And then you're going to have a deal team on the sales side that is addressing those questions. And sometimes you'll have a deal team that is unfamiliar with the business. And so if they're not able to review the documents that they're anticipating to review, and you're a new client, again, they're going to have red flags as well, but they're going to be your counsel, so they'll be there to defend you. What I would say is, there are different types of deal teams, let's call them law firms, accountants, HR professionals, for every size of business. So I actually had coffee with an accountant this morning at a pretty decent sized law firm, and he was just advising that they had a deal team of 20. And he thought that was small, because sometimes they go up against deal teams of size 200 or plus. They just have a lot of hands to put on billion-dollar transactions. So depending on the size of the transaction, of course, counsel's going to want to do all of our due diligence. We're going to want to spend a lot of time and effort going through all the books and make sure we disclose every rep and warranty, or request every rep and warranty. Those are the things that are really going to matter after the transaction's closed, because if something happens as the buyer, if something happens in the business and the assets have a lien on them, you're going to be able to go back to that rep and warranty and say, hey, seller, you made this promise. And then on the flip side, as the seller, when you're in Tahiti and you are, surfing, and then you get a text that says, hold on a minute, there are no liens. You got to go back to your reps and warranties to see what you guaranteed and promised. So what I like to tell there about that type of transaction, very compassionate to smaller businesses, very compassionate to the fact that there are not endless funds. They don't want to pay all of their purchase price in legal fees. But as attorneys, we are protecting ourselves and we're disclosing and we're getting your comfort level on your risk. And so at the end of the day, we're managing risk. We're trying to figure out, one, what is the buyer willing to accept? Two, seller, what are you willing to offer? And then we'll go from there. So something to keep in mind. A little peek behind the curtain. Of course, we could be up here for hours discussing this, but anything else? Okay. Thanks. Next, we have, I'm going to do it from memory. Is it Joe? I think Joe follows me. There he is. Here you go, sir.
Oh my goodness, I'm not used to holding a mic. Normally I can speak pretty loud, but we're okay. So, small business lending expert, Joe Martinez over at Fifth Third Bank. And what I do is I help businesses grow. So as you're looking to scale and grow, you're kind of going down. You're thinking about possibly adding that head count. You're thinking about buying that piece of property. Or maybe your dream client just walked into the doors, your dream job that you want to take on, but are you ready financially to take on that burden, to do the good job and capitalize on that? That's what I'm talking about when I'm talking about scaling a business, when you're thinking about the financial side of things. So, first things first, you got to understand what it is that you need, right? So you got to go, Stephen Covey, I think, said a long time ago, you got to begin with the end in mind, right? So you got to know where you're going to go. So you want to identify what it is your goal, what it is that you're trying to go to. Is it 10% revenue increase this year? Is it retaining my clients? Is it I'm ready to go ahead and add a second location and add 3 headcount to that? Am I prepared for that on a capital perspective? That's why I'm going to take the time to kind of go through. And also determine some of those future needs. So if you're going to be buying that second location, what does that look like? Are you anticipating inventory? Is that office going to do something different than the first office, right? And how are you going to attract differently? Some things to kind of keep in mind. I'll probably spend a little more time a little further down, but I do want to talk about rate fees and stuff. So as you're scaling, everybody comes to the bank and you're like, hey, I'm noticing I'm starting to see some fees. Like, what's going on? This is when we talked about the first time, right? In our first conversation, the first part of this series for starting a business was, am I anticipating my growth when I'm selecting my financial institution? So in scaling, am I prepared for that? Am I aware of the fees? Not all fees are bad fees, but you need to know what the ROI is for it, right? As you kind of go through. Do I understand how it's going to impact my business and why I'm paying for it? So a lot of my cash-heavy businesses. So I have a client. They own several fast food restaurants, big franchise. They take in a lot of cash. Well, a lot of cash has risk of sending employees out to go do the transactions for you, especially when you're dealing big volumes. And then there's a safety concern of leaving that kind of exposed. Well, there are solutions out there that can protect that. One of the big ones that are out there in the treasury world, as you think about scaling and you're in cash, is a cash processing system, which is really just a mini bank safe in your store. You can lay in the cash, you get that deposit in there the next day, you get that credit, and then the bank sets up the pickups for you, so you don't really have to worry about it, right? And it kind of takes through. Of course, there's fees associated with it, so it's a matter of what's important from time perspective. I also want to spend a little time on fees, because when you think about fees, I want you to think about your own fees as a business owner, right? Time is money. So if you're spending time doing big time accounting, right? You might be time for a CPA or a bookkeeper. If you're spending a lot of time on different HR policies, it might be time to get somebody on HR. Well, you find yourself doing a lot of things on the banking side of things, making a lot of the checks deposits, going to the bank 2 or 3 times a day. Well, it might be time to talk to your banker, right? And really try to figure out what are some ways we can cut down my time, because you're growing your business to really be your wealth management tool, right? That's the ultimate game. I think that's what Alan calls it, right? Wealth management system that you have out there. See, he's missed as we go. But, kind of put that out there. There's value behind your hours that you work. So if I can, sometimes some of those fees, yeah, you might have to pay, but you save in the long run, right? Your time, that's out there. You also want to kind of share, there's some volatility out in the market, right? A couple of years ago, you guys heard of some big bank closures, right? Bank of Silicon Valley. Everybody was like, whoa, what happened? This hasn't happened in a long time. And we got a lot of talk about FDIC coverage and kind of how to protect that. there. So you want to make sure, A, your bank participates in FDIC, which most major banks do. You should be able to see that logo. And if you're over those, you should have a conversation of what are some ways we can protect it, or what does that look like there? Because if you're a client that has money kind of coming in and out, well, normal swings are fine. This probably doesn't affect, but you have money that's kind of sitting there for a period of time. Well, maybe we talk about other strategies to help your money grow and keep it protected there. Also, you want to try to also find other security stuff. I know I have it kind of on a bullet point, but I do want to kind of go through as I talk about the bank. As a security, always try to protect yourself and protect those routing numbers. I did want to kind of put this plug in there because what I see is business owners, they get really excited. A lot of good things are happening, and then fraud happens, right? Somebody got a hold of your checking account information. Somebody got a hold of a check and washed it. Somebody got a hold of that cash deposit that the employee just left in the store overnight and all of that, right? Those things happen. Make sure you have those fail guards in safe. And we'll talk about it a little bit later in there when Paul comes up. But there are a lot of different ways and you can do that. But I do want to point out, because when you risk your money, you risk your livelihood in there. So you want to make sure that that's protected. And then look at those other non-financial factors. And so as a business owner, if you're a retail presence, retail store, and you're here in Charlotte, it may not make the most sense to only bank, say, at Bank of Massachusetts, right? If you're dealing with cash and kind of going through, maybe you might want to look at branch convenience might matter. If you're online, well, it may not matter as much, right? And you're trying to look at some of those convenience factors. So does the branch make sense for me to work at? Does that, do they have the right ATMs? Do they have where I'm going to be doing my business, and does it make sense for me? Make sure you build your relationship with your banker. And when I say that, I say not I bank at Fifth Third, I bank at Bank of America. That's great. I bank with Joe, I bank with whoever. You should be able to call them by name. Like, this person should be able to at least have an idea of your business to a degree where they can give you some good advice, right? I want you to be able to come to me and go, hey, Joe, I'm thinking about maybe hiring somebody at the end of this year. What are some steps I should think about, right? And let me let's talk through that, right? Maybe I can get you in front of somebody else to provide some other counsel if needed. But you want to be able to kind of pre-plan for some stuff ahead of time. So really having that conversation and having somebody that understands you really does matter in the financial business. For fraud protections, I can tell you of one client in particular. He's on the south side of Charlotte. This happened not too long ago. Victim of fraud. Had those checks, came into a financial institution, was trying to cash it. Now, they called me, I'm the banker. Luckily, I was able to kind of grab. I'm like, hey, what's going on? They're trying to tell me what the transaction. I'm like, that sounds not like him. They're like, oh, he's here at the branch. I said, well, let me call him. I said, don't put him on the phone. Let me call him real quick. And now the guy at the branch has the ID with this person's information. But I called him. I had the relationship. Like, hey, this doesn't sound like you. And he's like, no, I'm not there. I was like, I didn't think so. And so we were able to kind of stall at the branch. Long story short, we were able to call the police, have that person arrested, and I was able to protect that client's money. Again, because I knew the person, right? Got to kind of build up that relationship. And again, it's not perfect. I don't know all my clients inside and out, all of that either, but I know enough, right? And I keep notes usually on their files. And so you want somebody that you can trust and kind of go through and kind of have your back if something does happen. Because it's scary when it does. And so you want somebody you can really trust to kind of guide you through. So as you're scaling that business, you want to kind of keep that in mind. What does that look like? From things like treasury and merchant. And when I say treasury and you hear those terms, really what that's talking about is fraud protection really for the account, right? So what does positive pay look like? A positive pay account is really an opportunity for you to put fail safes on there, where if a check clears through your account, you can stop it. You have until a certain time, usually about 11 a.m., you can go in and go, that's not me, and go, nope, not today, right? And we could reject it out. We have ways you could upload maybe a series of check numbers. These checks are good, I wrote them, and only those checks clear through our system. And if the check number doesn't match, we kick them out. There are certain tools like that, but as you're scaling, you need to kind of think through, again, right, begin with the end in mind. Where am I going? What does that look like? If I'm taking on 500 clients, do I really want to deposit 500 checks? What are some ways I can do it differently, but securely and efficiently, so I can keep the cash flow coming and continue to keep moving through? And then where I kind of put it towards the end is the one I get the most questions on, right? Joe, I'm trying to scale a business. I need some money, right? I need to go. I need to figure out. I need some line of credit. I'm trying to buy this piece of property. It's $1 million. What do I have to do? And again, kind of going through and why I put this last is if we're not doing the first stuff, knowing, understanding where your goals are, evaluating where you can kind of cut costs, and understanding what kind of convenient services are provided, understanding, your banker, make sure they understand you. Now we can have a real conversation as to what your needs are, what's going on. All right, you're looking to buy a piece of property. What have you done? What kind of work have you taken? What have you saved thus far, right? There's down payments that usually are aligned with that. What does that look like? And be able to kind of set up a plan so we can go ahead and put together a package that we can submit to underwriting that gives you the best chance of approval, right? So when I go down, I have a real transparent conversation with my clients, is really to put you in the best possible position you can get a yes, right? I don't want to tell you no. That's no fun, right? I want to say, yeah, let's do it. So you want to kind of have that out. But that line of credit and that loan, as great tools as they are, you do have to be responsible with this. So kind of keep that in mind as you kind of take on that expansion, that the growth that you're anticipating, that you're doing all the other things, right? Because sometimes I see shortfalls and, I don't know, how am I doing on time? Okay. Sometimes one of the shortfalls I see is they get the access to capital and then they don't finish or not as with the same enthusiasm. And sometimes it kind of puts them in a pickle where things get tight, right? If you're not out there selling your services, your products, and those margins come through because a new payment comes out, you're like, whoa, making sure you kind of continue that. This is to help boost and go, and you have to understand what those payments and interest and those terms look like so you're not surprised and you're ready to go with that there. So with that, I'll kind of open it up for questions and see how I can help.
What's a washed check and how do we guard ourselves against that?
Wash checks, those are so much fun. So a wash check is you write a check out, say, to a vendor. Right? You write ABC company. Somebody else and you mail it, somebody else gets a hold of that check, they clean it. And basically what they'll do is they'll take off ABC company and rewrite their info, right? It's Tom Jones today. Right, and they take your money. Or you write it to Tom Jones, and it's Tom Jones cashing it, you write him a check for $200, he adds that extra zero behind it. Which is why it's also really important, you make sure you do that written line and it's clear, because if you can't really make out and you're depending on somebody to look at the numeral side, well, you can have conflict that time in there. So just kind of keep an eye on that. Best way to protect it is really look at your digital payment methods. So your Apple Pay is really effective. You can do ACHs. And then we have the positive pay if you do have to do checks. And again, commercial clients, you guys are going to have to do that from time to time. But there are tools at the bank available which kind of minimizes that risk. Nothing's 100% foolproof. I wish I could tell you it was. Unfortunately, the bad guys are out there. They're doing what they do. All you can do is just kind of put yourself in the best position to minimize that risk and then have somebody in your corner ready to kind of help you when something happens that you can trust there. Any other questions?
For my clients, they pay me by check. I invoice them and they send me a check.
Absolutely.
What options are there that make sense based on the business as far as, something other than me taking, 10 checks to the bank? I mean, is Zelle a reasonable payment plan or should I be doing something else with the bank?
You can do Zelle. Zelle has limitations as far as like limits and stuff, and everybody's different. Every bank is different. It's basically a third-party company that the banks participate in and kind of move money around out there. If you're looking for other ways, you could look at ACH options. Like at Fifth Third, we offer a solution called Biller Direct, in which you can create an invoice, send it out, and embedded in there is an opportunity to pay through ACH. You can also add credit card if you had a credit card processing solution as well, but you'll be able to kind of do it like that. Again, not every client's going to be able to do it, and we know that, but anytime you can kind of reduce, because for you, it'll be more efficient, right? A little quicker, kind of turn around, and that's really what you're looking for, is to be able to do that.
Is there a place as far as, where it starts to make sense? The fees or the costs associated with that. I have clients that will say to me, I'd like to pay you via ACH, so that happens, but.
Yeah. It's really every business owner. So when you start seeing it impeding on your normal day-to-day activity. So when you start taking what would take 30 to 60 minutes in doing your banking, and it's now taking 2 days to kind of get through because you had to stop, because you had to continue doing what you're doing and come back to it. When you start finding yourself like that, honestly, that's really when you really want to start kind of thinking through that, because you're starting to scale. That means you're getting busier, right? Good things are happening, and that's what you want, but you need somebody you can kind of trust and look at those solutions there. And again, just because it may have a fee associated, doesn't necessarily mean it's bad. It's just, what is of value to you into what you're getting, and you just have to understand kind of what you expect. But typically, it's when you're running, comes down to time.
Your checks for payment for your services via phone? Take a picture of the check?
Yeah.
So you don't go to the branch? I heard you say go to the branch.
Occasionally, I go to the ranch so I can say hey to my.
It happens. We're open. We're there.
Yeah, I just say hey to Joe. I mean,
No. Yeah, the branches definitely changed from the transactional piece, but we still there with the banking side because people definitely still want to have a conversation there. But
Well, and to your point, I mean, I had a person standing in line cashing a check, and my banker called me.
Yeah.
And was like, hey, like, you've never written a check this big, and we've got a guy in branch, and so yeah, so.
makes a difference. Get to know your banker. The more they know you, it matters. Like when we start kind of recognizing certain things, because I could go on and on, like Sean said, for hours and hours on that, but we'll be all set there.
Yeah, what's the bank's posture on pennies and nickels? You guys happy with all that currency?
If it comes in rolled, it's great. I do not like rolling them. That's not my forte.
I just had a shout out for Positive Pay. We sometimes write checks to clients on transactions, and it was the month I started my business, got 500 checks, had sent out 2 or 3, and ended up getting an email that there was a Positive Pay notification, but I did something wrong. Some guy had gotten a copy of my checks, but I only had 3 out in the wild, and he had written himself a check for like $50,000, and I was able to click no. Of course, I was very nervous at the time, but I called the bank too, but they stopped it, so, yeah, big deal.
No, there's definitely some things to kind of consider, and as you're scaling, those are just some things to kind of be out there for you. But thank you guys so much for your time today. I believe it's Nikki next, right? So just kind of, I'll leave you with my tagline because everybody said Randy had the good one. But remember, if your business is ready to grow and you're in need for some dough, you go ahead and call Joe. Joe Martinez over at Fifth Third Bank. All right, where's the clicker?
The clicker's next to the computer.
Oh, it's the little one? There you go.
It is me, yay.
Joe, will you go sit in the rest? We try to stall. I have stalled some people for a while. But we got something.
Oh, that's good. Hi, I'm Nikki with Abacus BK. I help businesses and individuals on the front end of tax preparation. So I'm not a CPA. We have one in our group who does a beautiful job with that. But what I do is I help business owners to that point to help them understand what's happening with their business from a financial perspective, and that helps them make educated business decisions in real time. And I say real time because it doesn't take weeks or months for them to be able to act on something that they've seen or concerns that they have. And that's very important, especially when a business is scaling. A new business is going to have a lot of those, but as you're scaling a business, like to Joe's point, there are many goals that you have. And if you have to pivot quickly, you need to be able to do that. If you don't have that information in real time, you can't. So it it prevents you from being able to meet those goals. So one of those things, new businesses often don't engage a bookkeeper. They handle kind of that bookkeeping piece on their own. But as you're scaling your business, you're more involved with the day-to-day activities. And that means that you may need someone. You don't have that time any longer to spend 20% of it on those administrative pieces. You need somebody that you can have a good relationship with, that you can talk to, that's going to be available to answer those questions and take care of that for you. And then as you're seeing what they're doing, you're educated on why they're doing it that way and what they're doing. And a lot of that comes through having a cloud-based accounting software. Now, an accounting software doesn't necessarily have to be cloud-based. I have some clients who are currently working on QuickBooks Desktop, which is not convenient. It's not convenient for them as business owners, but it's also not convenient for anyone who is trying to get information from them. And worst case, I have seen clients who have their accountant or CPA who is doing the bookkeeping without having a cloud-based software like on QuickBooks Desktop, and they don't have any access to it whatsoever. So the only financial information that they're getting is either from their accountant or they're not looking at it at all. And that is a serious concern for a business owner, particularly one who wants to scale. One, they can't see that real-time information, and they can't ask questions when things are happening, whether good or bad. They just can't ask questions. And that's really part of my tagline, is the only intimidating numbers are the ones you don't know. If you don't have access to your accounting, you have a whole lot of numbers that you don't know. You can guess, but are they accurate? So that's very important. The other piece of that is making sure that your information isn't being lost irrevocably. It doesn't have to be rebuilt. I had a client a few years ago who was hacked, and they held their QuickBooks Desktop hostage, and they didn't recover any of their data. We had to go back and rebuild it. So it's very important that it's cloud-based, that it's something that's accessible, and something that can be backed up, and your documentation for the backup is there as well.
Hold on, you just said QuickBooks data was held hostage. If it's held silo on an independent computer that's not connected to the internet, but it's only there for the inside bookkeeper of the company, how is it held hostage?
It was on a server. They hacked the server. So leveraging paperless technology, and this is important no matter what size business you have, simply because if you're ever audited by the government and your name could go into a hat and be drawn randomly, whether you have sketchy business practices or not, if you don't have the supporting documentation to show how that money flows through your business, you could be in some trouble. So understanding what that looks like. Maybe you have an accounting software that is cloud-based. Does it have some storage capability? Do you have the ability to put information in receipts, contracts, purchase agreements? Can they all be stored with the transactions that can be readily used? If there's only certain capability, what are your other additional options to be able to do that? So it's important to understand what those things look like, the cost involved, and how quickly they can grow with your business, right? Because a business can scale quickly, but if you don't have those if you haven't given thought to what that looks like, then you might run into issues with accessibility and transparency. Into implementing new standard operating procedures or even accounting policies. Maybe you were the one-man show and you were handling it, but now you have other people who are helping you with pieces of it. An accounts receivable person, an accounts payable person. Do you have operating procedures in place to know how that information flows to that individual, that you're ensuring that they're getting all of that information so you aren't taking steps backwards, and then how that transparency is funneled through anyone who needs to access that information? Are they storing the information in a cloud-based software, or is it being held hostage and you just don't have it? You can't determine if it was a legitimate expense, the money left, but why? So it's important to have those procedures in place, who they involved, who's accountable for them, and how that flows. And then from an accounting standpoint, is it a generally acceptable accounting practice doing it that way? So it's important to have a relationship with someone who understands how that workflow should look like. One, to create efficiency, but to make sure that you're meeting all of the guidelines and staying safe. Utilizing accounting features that help gauge your metrics. Now, in the beginning, most businesses, I was just at a networking group meeting and asked, we were talking about skeletons, and we asked, who looks at more than their P&L as a business owner? And one person raised their hand, but they looked at their P&L and balance sheet. That's important. skeletons can be hidden on other pieces of financial data that don't necessarily touch the ones you're looking at. And so it's important to know what those financial statements mean, what the information is contained on those, and that if something doesn't quite make sense, that you can address it and address it quickly. So in the beginning, you might only look at those two pieces of information, but really as you're scaling your business, like Joe said, you're setting goals for your business, where you want it to grow, how quickly you want it to get there. If you don't have those metrics, things like budgeting to make sure that you have enough money, that you're not spending too much to get you to that goal, forecasting what that looks like, when that money is going to come due. Are you utilizing things like maybe your vendors give you terms and instead of paying it tomorrow, you hold off a little bit to leverage some of those funds being available to help you meet those goals. And then cash flow management, that's important. There's a difference between revenue and cash flow management. So if you don't know what those differences are, it's a good idea to make sure that you're utilizing that relationship you have with your accountant to help you understand those and what that looks like. So those reporting metrics can look different for every business. Your accounting software can make them look different. And if the information going into them is not accurate, then is the information you're getting out of it to base your decisions on actually accurate? So if you are unfamiliar with that, or you don't have a good relationship with someone who is accessible, who can talk to you about those and answer those questions, then it might be time for you to implement a new standard operating procedure. And then that really just boils down to you having a good relationship with that person who's handling that for you. Obviously, you want them to be trustworthy, right? If you can't get a hold of them, even if they are trustworthy, it may not make you feel that warm and fuzzy, right? So wanting to have somebody who allows that time available for you, will pick up the phone when you call, will answer that email in a reasonable amount of time, and who can explain those things to you that you're seeing. Okay, I saw this, it's a negative accounts receivable. Why is it like that? What caused that? You know, my accounts receivable list has 20 clients on it and I only have 10. Why does it look like that? There's things that your accountant should be able to answer for you just by looking at your financials, and they should be accessible to be able to do it, because that's the only way that you can look at if you're meeting your goals, if you're on target to meet your goals, and then finally, if you have to pivot quickly to be able to maybe stall that goal, but adjust to continue to make it to that goal. So it's important to make those real-time decisions, see what that looks like. And real-time may be, okay, there was a big purchase yesterday, let's get that sorted out. Let's give it a couple days, but it shouldn't be weeks or months that you have someone trying to catch everything up to get you those answers, because inevitably it's not going to be very good. Any questions?
So you mentioned QuickBooks Desktop. When is Intuit gonna stop supporting that?
They said that in 2024 that they were going to be done with it. They have made adjustments to it's almost like if you have a subscription level, they have done away with a lot of them. There's only 2 or 3 options left. Some people are grandfathered in because of having massive companies that use it. But yeah, they keep talking about doing away with it, and they keep implementing things trying to move people off of it. It used to be that once you had QuickBooks Desktop, you didn't have to pay for it again. But now they've implemented, if you want updates to your desktop, you now have to pay a monthly or a yearly subscription fee to do that. So they're really trying to move as many people off of it as possible. What I have found is that CPAs are less comfortable with the online version. There's actually a new update to the online version, which makes the view even different than it was before. So it's those learning curves that they kind of throw in there that make it more difficult for people because the visibility on a desktop version never changed. It's always the same thing. In fact, somebody said, oh yeah, I liked the little path. What happened to the little path? It doesn't exist anymore unless you're on desktop, but the features are still there. They're better. They function faster. It's just a matter of getting used to them.
Little tip on QuickBooks. I have not upgraded QuickBooks since 2018. So we've been getting a notice over the last 5 years. It's going to blow up. It's going to blow up. It actually says something to the fact, error, whatever. So finally, last 3 days ago, I decided to, before the thing stops working, the 2018 that's not supported by Windows 11. I said, okay, we'll upgrade. And it was $389. But if you go to Slack or upgrade, you can Google it, there's an upgrade with lifetime for $249. Same full version of the 300 and does not require. I think it's their effort probably just to sell a lot of it, so they wholesaled it out. So I bought the lifetime, and it's the desktop version because I am too controlling to not let anybody else have access to the numbers, and it's just totally done in-house. That's why I asked you that question. Is it done in-house?
Mm-hmm.
So
Yeah.
anyway, lifetime, QuickBooks, full version, unlimited access to every upgrade that they ever make, desktop version. It's on sale for $249 forever. Right now, it's in the link. You can Google it. But anyway, you have to buy it through, I think it's not Slack. Maybe it's, it's create a Slack account and then, but not that.
The other concern about having it on even just a device is what, Paul, you said your laptop crashed. If you have it on a single device, it's not backed up on a really consistent basis, and you have a lot of information going into it.
So Paul, we back up to a OneDrive that's backed up into the cloud, right? And so you back up in, and then every third one you back it up to a USB.
And the other thing that a lot of people don't know about the QuickBooks Desktop is even though there's not a lot of information accessing it through the internet, there are transactions that you can physically put into it that become encrypted and cause issues with the backups. So you can have a backup as of yesterday, but if you have any encrypted information in there or data that is not functioning properly, you have issues with restoring that backup.
So Nikki's my bookkeeper, and my pain point has always been my accounts receivable. When she came on board, I think she looked at that and she's like, Sean, what are you doing? But what's cool about the online QuickBooks is it kind of automates sending those reminders. And so, when I'm drafting contracts and advising, once I'm done with the client, I'm done. If they pay, that'd be nice, but if they don't, that's kind of the old Sean. But now with QuickBooks Online, it's automated for that. So
Yeah.
that's nice.
And that is part of those SOP procedures that can be put in place, right? There's a misconception that bookkeeping can be automated and there's very little that you need to do with it. It can. There's a lot that can be automated, especially with the suggestions that QuickBooks makes. If there's one suggestion that they make that's not very good, though, it can send a lot of things out of sorts for you. And that can be something as simple as a transaction came in, that's sales. Well, if you're invoicing and you're not applying that deposit to the invoices that you receive, you're now duplicating your revenue. So if your financials show $100,000 in revenue, but you've been doing that, you might not have accurate numbers. So it's important to understand how that automation works, that it's being done correctly, and that when it's doing its job, it makes sense. So to your point about ways that you can take payment. QuickBooks and a lot of the accounting softwares, they do have their own merchant service that they can set up, so you can send invoices out of there and you can choose the way that they pay. In fact, QuickBooks Online is actually offering, they're trying to get more into that financing world, and so to no cost to you, QuickBooks will offer, you can turn on offering the option to have, maybe it's a large invoice you're sending out, be financed by QuickBooks. You don't have any fees incurred for that. They pay you what was on the invoice, and now that customer is entered into an agreement that it does not affect you and your revenue whatsoever. So there's some options that are there if you have, clients that may need that. It's not, at least now they're not charging anything for it. Now that could change, but if that's something that your clients need, it's definitely something good to look into. So you have some options, and they're really pretty consistent with most other merchant services out there. It's like 1% on ACHs, usually 2 to 3% on credit card transactions, depending on the type of transactions. And what's nice is they enter all of that. That takes that off of you to have to worry about storing any of their payment information or even seeing it. You're separate from that. They enter it on their own.
So Paul Blanchette with Nerds to Go. We are a local IT company that we provide managed services to our clients, and what we call is approachable IT. So we avoid the geek speak, and we help to educate our clients on what we do. So Cam was just talking about how the insurance was the floor of the company. I always think of IT as the foundation. It's all the stuff behind the scenes that a lot of people don't get to see, don't really want to see, don't want to get into, or understand, because it can be tricky. But it is the real foundation of your business. Because if your IT is not working, because we're all attached to our devices, we're all attached to the internet, and if we're not connected, then we don't have our business. We can't run our business, right? So one of the things as far as scaling that we've run across in the last 6.5 years is when we see people growing their business, it's they run into heterogeneity. And I know when you first saw that slide, you're like, there's no way he's pulling that off. Right? Show of hands. Thank you. So I've been practicing. But so heterogeneity, what I mean by that is, two people start a company, and then they add a third person. Well, the first two people, they have one Dell and one HP, and then the third person comes in, they've got a Mac, and now you've got three different companies branded of your IT, and you've got two different operating systems. And then you have people that will have, we have Microsoft Home on one computer, Microsoft Pro on another computer. And that just adds more and more layers of issues. So what we try to do is, as when we come in, as companies are growing, is let's get some homogeneity out of in your network. Make sure everybody's using the same type of devices. Make sure, are you going to be a Google Workspace company, or are you going to be using Microsoft, or are you Apple? Make that choice and make it throughout the company. Now, you can put Microsoft on Apple and those kind of things for if you have certain situations where we have clients where they'll have some design people in their company, so they need a Mac for that, but they can still run Microsoft Office on those Macs. But again, it's having that homogeneity throughout the organization, whether it's 3 people, 4 people, 50 people. All right, it's just going to make your network that much more secure and also that much more stable, which is really what we're looking for, is just stability. And then you have to decide, where are we going to do our business? Are we going to be working in a brick and mortar? Are we going to be working from home? Or are we going to be having a hybrid? Well, all 3 of those have a completely different level of security issues and solutions that come up with that and are aligned with that. So if you have hybrid people, you want to make sure, depending on what they're doing out there and what data they have access to, do you have the right VPN? Do you have the right secure VPN into the network, into the server? And there's a lot of other options that you have to look into as well. Same with if you're working from home. If everybody's working from home, where's the data being stored? Where is how secure is that data? Is it being backed up? Are there cloud situations that we were just talking about? Are they being utilized? So there's a lot of different things that you need to be aware of and to start to consider. And then again, we were talking about scaling your business. Is your network scalable? You don't want to have to redo your network every time you hire one or two different or more employees. So you want to invest in the early part of your as you start to grow. You want to invest in that network to make sure that as you start adding people, the equipment can grow with it. Because again, it gets to be expensive redoing your whole entire network every time you hire 2 or 3 people or bring on 2 or 3 people onto your company. And again, that also comes in with the flexibility of things as well. You want to make sure that the equipment is flexible for the different needs of your individual employees. And that network infrastructure kind of also falls into that. You want to make sure that it's robust enough to handle the more workload that you have. You're going to be running the computers more, or a server more frequently. There's going to be a lot more broadband. You want to make sure you have enough broadband if you're in the office for all the employees, because everybody has their devices and their laptops, their tablets, their phones. Smart. If you have a smart TV in the office, all that drains your network. So, do you have the right network set up for your business and for your employees? Because a lot of times we run into where people will say, our network was great, 3 months ago, and then all of a sudden it's crap. It's running real slowly. We can't get anything done. And then you're like, well, what's happened in the last 3 months? Well, we hired 2 people, and then that person changed computers. And so it's like, oh, well, think of all the devices that you just brought into your network, and you're running them off of, and nothing against Spectrum and AT&T, but the routers that they have are not geared for, 40 people, working in an office, or 15 people working in an office with all their added devices. So you want to make sure you have the right network, because you want to maximize your uptime, right? So, and that also means it doesn't have to be down, right? But it also means that, is it working fast enough for everybody to do their jobs efficiently, right? Because if that's not happening, that's costing your business as far as the overall productivity of your staff. And then data security and compliance. We talked a little bit about that with making sure you have your cloud, your backup, and your backup backed up. There's a rule of 3 when we come to backup. You want to make sure you have the data that's on your computer. You want to have a cloud backup of that, and then you also want to have a separate hard copy of that local that you take out of the office every night, and you should really switch out that hardware, right? So that you get in a car accident and that destroys it. Well, at least you have something back at the office that you can still download really quickly. Same with the other way around. The office catches on fire. Well, you've still got your hardware backup that you can and your cloud backup that you can bring in. So there's a lot of that kind of situations that you want to make sure you have, specifically as you grow, because the data that you have is going to be more complex, more important, because you have more of it. You have more clients. So you lose 2 client data, or data for 2 clients. That's not going to shut you down. You lose 200 clients data. That's going to shut you down, because you lost all that contact information. You lost all the stuff of how you do your business, right, for those clients. So you want to make sure that is that's something that you want to have secure. So you want to make sure you have the right backup. You want to make sure you have the right antivirus. And there's a lot of different solutions that are out there that are available as you grow and can scale with you as you grow your business. So it's very nice in that. And then you have, as you get even to a larger point, you get to the point where it's like, well, do I need to have internal IT support, or do I want to have an external expert manage my data? And and that's something that every business, it's going to be different with every business. Well, obviously, what we do is outside. We do the outside support. One of the advantages of that is there's the cost advantage that comes with that, because you don't have salary and benefits and all the other things that come with having a local employee. But also you have an expert or experts in their field that are much more aware of the trends that are out there and the new solutions that are coming to market, because that's our job. Our job is to keep up with all of that. Whereas a lot of times folks internally, they know the business stuff, but they don't understand, the new stuff that's out there, because that's not really what their real job is about. Whereas we have so many different clients that that we can bring different solutions to different clients. So we know we have a much more broader knowledge base of what solutions are out there for different companies. So, but our bottom line is when you follow this through, what we're really trying to do is ensure you have more effective and substantial growth as you grow with your business, but you're also minimizing the risk and maximizing profits, which is ultimately what you're setting that solid foundation is going to help you do as you grow your business. So that's the IT. Any questions? Randy.
What do you folks recommend for storing passwords?
We have a password manager that we use. So a great question. A lot of people will use the Google password or the Edge password, Microsoft Edge password. We don't recommend those because they're easily hacked, because if they're good enough to get into your network, I guarantee you they're going to be good enough to hack what your password is for your passwords on Google. So what we use is called LastPass. There are other out there, Passkeeper. There's a lot of other ones out there. We've been using LastPass now for 4 or 5 years. It has all you have to do is remember your master password, and you can also use some biometrics along with that. So so you can use a fingerprint, eye scan, things like facial recognition. So it makes it a lot easier to remember, be able to get into your vault, and then it will allow you to save all the other passwords that you need throughout the day as you do your business.
Yeah, I personally use that one. It's nice because they let me know what they're updating to keep up with all of that hacking nonsense going on and the level of encryption that they do. Right. And I can speak personally, I thought I forgot my password at one point, and you can't even get back into it.
No.
So if you forget your password.
No, do not forget your master password.
Do not forget your password. Like,
yeah, because they will not. Yeah, they will not let you back in. Absolutely, it's a very secure. Yeah, it's held on 2 separate servers, the master pass and password and your passwords. So it's a very secure network, very set up structure. So we've been very happy with it over the last 4 years or so. And then, do you have a question, John?
That 2 local copy thing is really smart, because if somebody ransomwared your network,
right,
that would be your last gasp, right? That could be your safety net. Yep. Is that copy you took home that night or the night before?
Absolutely.
Okay.
And the other thing too is, along with that, I think it's like 8% of people that get hacked that pay the Bitcoin fee get their data back anyway. So it's there is no guarantee that you're going to get your data back even if you pay the ransom. So it's very important to have that local backup, so that and it's a lot quicker than bringing it down from the cloud, because it just the speed of your internet is really what, and the amount of data you have is what costs will impact how fast you can get your data back. So if it's a local copy, you're up and running in a couple hours. If it's in the cloud, it could be a couple 3 days, but at least you have it.
Those 2 local copies, is that disc to disc, or do you still do tape?
Just a tape?
You still do tape backups, or is it always disc to disc?
It's all disc, yeah. We do a solid state drive. We call a NAS, so again, that depends on how much data you have. If you're 10 gigabytes, then no, you don't need a 4 terabyte NAS. But it is something that you can have locally, so that if something happens, you're up and running like that, just seconds. So, very good. Well, thank you much.